This is a play on an old CS article called GoTo Considered Harmful. So this was back when everyone used GoTo and there weren't while loops and so on. And there was some discussion of, wow, just general random GoTos, not so good. So anyway, holding RSU is considered harmful. Let's say you have worked at your first job for a year. And at the end of the first year, you get your December paycheck. Okay, so you work January through December. You get your December paycheck. And you see that you've basically got pay of, I don't know, 9K, because I said it was about 100K. And you've got, so your vested RSUs, I don't know how much those 500 shares are worth. I don't know what company you were at. Let's just say this is a, 13K. So you got 9K in salary and 13K in RSUs. What can you do with the RSUs?
You can hold them.
Hold, that's one thing. Thing two?
And sell immediately.
Sell. And thing three would be sell enough to pay the taxes. Because the IRS is going to look and it's going to say, you got paid $22,000. That's what you owe taxes on. Okay? And so you might not want to dig into your 9K here to pay for the taxes on the 13K. So you might say, I'm going to sell whatever the number is, $3,000 of them to end up with a net of 10 that I'm holding. I say there's only one choice you should do here, and that is sell those suckers. I remember talking to a colleague at Google, right? And he had this massive collection of RSUs because he had never sold any. He always just kept them. And he viewed those as funny money, okay? He had his real money, which was his pay, and his funny money, which was his RSUs. And actually, it turned out quite well for him because Google stock did well over the years. But that is such a mistake. There are not in life buckets of money, and this is real, and this is funny, okay? Money is fungible. God doesn't make different buckets for it. So choosing not to sell, and this is in general a good idea to think of, choosing not to sell is the same as choosing to buy. Okay? What if Google, instead of giving you $9,000 in pay and $13,000 invested RSUs, instead gave you $22K in pay? From the IRS's point of view, same. You still owe taxes on $22,000. It's as if they gave you $22,000 in pay and you chose to buy $13,000 in stock. I find it hard to believe that, first off, that you would have done that. And second, even if you were, that $13,000 was exactly the number you would have chosen. So, sell it, and if you must, make a positive decision to buy it. And come back to me and I'll pay the brokerage fees for that, okay? That only if you're at a no-fee brokerage. Does that make sense? Why? Oh, and I haven't told you why you don't want to hold your company's stock. So here's why you don't want to hold your company's stock. What's the reason to hold company stock? Would you hold it if you thought it was going down?
No.
No. You'd hold it if you thought it was going up. Okay. So you want to have some skin in the game in some ways. My claim is you already have a lot of skin in the game as to whether your company does well. Okay. First off, maintaining your job. If the company does awful, eventually they're going to fire you. Lay you off. If you do awful, they'll fire you. But if the company does awful, right, they will lay you off. And in that case, do you really want your RSUs also, because that's going to all of a sudden not be worth anything or be worth much less? So to have your income shrink and also have your funny money shrink, okay? No, you don't want those to both happen. Plus, you already have, you participate in stock appreciation, even if you always sell your RSUs immediately. Why? So my claim is, if the stock goes up from 1,000 today to 2,000 4 years from now, you get to participate in some of that. Because you've always got RSUs coming that haven't yet vested. You've got RSUs coming a year from now, and 2 years from now, and 3 years from now, and 4 years from now, or possibly just quarterly all the way throughout, right? Because you got your initial stock units, and then you also get refresher grants. So you've always got 4 years worth you're looking ahead, where if the stock goes up, you're getting more money. Because when they give you those stock units, they give you numbers of shares. Okay? They base the numbers on shares of what the stock was worth that day. But if the stock goes up over time, the amount of money you're going to get goes up over time. Right? These vested RSUs, the 500 of you got when you initially signed up, happen to be your 13K when they get given to you. Okay? So you're already going to have some appreciation anyway. So I don't think that of all of the possible places to invest in the world, that if you did careful analysis, you would say it is such a coincidence. But the place I work happens to also be the best possible investment. All right? Questions on that? All right. I did get my friend eventually to sell at least half of his stock and invest it in something else. But boy, it was hard work. And some people may talk about long-term capital gains. Okay, long-term capital gains are when you buy something and own it for at least a year and then sell it, you have a reduced tax rate on it. If you have short-term capital gains, that is you sell it before holding it at least a year, you have to pay a much higher rate. And so some people will say, well, I want to hold my RSUs at least a year so I can get long-term capital gains rate. But the fact is, you're already paying this as if it's your income. It is exactly identical to saying, I got $22,000 in pay. I'm going to choose to buy $13,000 in RSU or in stock and then hold them for a year so that I can get long-term capital gains on that $13,000 investment I just made from scratch. Okay? It is a from scratch investment. So, questions on that? It's non-obvious, I guess I would say. And the default is, and the company wants, in some sense, you not to sell it. Because they'd like to have, people who are, I don't know how to say it, really committed, again, with skin in the game. You've got a lot of skin in the game already.
If you sell your RSUs, do you need to pay income tax and capital gain tax on it?
Nope. It's not capital gains because you just bought it for $13,000, right? It's exactly as if they gave you $22,000, you said I'm going to buy $13,000 worth and then turn around and sell it again. Okay? The difference is you have to go through the step of selling it because they give it to you in two different currencies.
So then, they're if they want you to hold it, they're trying to keep you with the company via loss aversion, right?
Loss aversion, and the other is just, well, actually there's a bigger reason why this is all done. Historically, and I think this has changed, but historically the accounting for if I pay you $9,000 in pay and $13,000 in stock was that the income statement for the company showed $9,000 in payment for employees. Right? So if they did this for every employee every month, they just did this way, then they would show $9,000 a month in employee compensation. And the $13,000 never showed up there. It just showed up on the balance sheet as there's more stock out there, more shares outstanding than there used to be. And most people don't look at that very much. You just look at the income statement and say, how much did this company earn in this time period? So I believe that has changed, but still that's just how things are done. And I think you should just ignore the fact that things happen to come in as RSUs.